Good afternoon, BrightStar. Thank you so much for being able to spend time to listen to this recording. I have with me Casey Leanna, and Casey works for a firm that has helped me a whole lot because insurance is hard. This is a discussion around medical insurance and some choices you have available to you. So Casey will take you through the details, but you have to decide what you want, and you will have to take a step to respond to get information in, or you miss the chance for another year. So please listen carefully. We'll have this recording available. You can listen to it as often as you want, but you don't have a lot of time. So with that, let me turn it over to Casey, who is with Candidate Bloom. And a lot of other Bright Stars have worked with them, and they're really customer friendly and very helpful. So Casey will kind of explain this stuff that is medical insurance. Thank you.
Hi, I'm Casey Leanna. I'm with Candidate Bloom Wealth Insurance Solutions. I help with Patricia behind the scenes, like she said, trying to set up really good benefits for you guys, health insurance wise, and also on the non-medical side of things. That's going to be disability insurance, life insurance, and then there's dental and vision as well. So I'm going to go through all those options for you. I have a benefit packet that Patricia may have forwarded out to you through PDF version that lists out all these benefits I'm going to go through, so you can use that as a tool to look at them, try to understand them after the meeting, and then kind of if you have any questions, my contact information's in there. Feel free to reach out, ask any questions during this open enrollment period. So open enrollment's going to be open from now, and then we'll close on the 23rd of December. So what that means is you all have gotten an email to your emails from Employee Navigator. It's going to ask you to log in. You're going to have to register your account. You'll just create a login on there, and then it'll bring you into your elections, where you're going to be able to make your elections right on this online tool. And then from there, once you submit them, we'll be able to submit those elections to the carriers. It's a very user-friendly tool. Once you get logged in, it'll walk you through each selection, each option for you, and show you the costs from your paycheck right on there. So with that said, the most important thing, getting logged in, making your benefit elections. So I'm going to share my screen now and show you the plan options that are going to be available and the benefits with them.
Question, Casey, can you explain
Mm-hmm.
what's open enrollment and why is December 23rd important?
Yes, so open enrollment is the time to make any elections for either your health insurance or your disability, life insurance, dental, vision. It's a once a year thing, unless you have a qualifying event, as if you were to, let's say someone were to have a child, that would count as a qualifying event to be able to enroll mid-year. Let's say you were brought on as a new employee, that would be a qualifying event to come onto the plan. There's different qualifying events out there that would allow you to go mid-year. But right now is the time to make sure you can get on these plans. So that's where this time period opens up. And then starting January 1st, what benefits you picked will go into place. Due to the tight timeline of the 23rd, you will have your coverage starting 1/1, but there just may be a delay in ID cards. So if you have to submit any claims, you'll just have to wait for a reimbursement on that. So if you need any medications right now, I always recommend on your current plan before 1/1, just to get everything filled before the new year. That way, if there's any sort of delay in any ID cards, you have that already taken care of. So yes, so the most important thing right now is this open enrollment, because it happens once a year, unless there's a qualifying event.
Thank you.
Alrighty, so with that, I'm going to share my screen. All right, can you guys see my screen here?
Not yet.
Oh, there we go.
Yep.
Now can you see it?
There we go. Yes.
Okay. Let me just move this off here so I can see. Alrighty, so with your benefits, these benefits are going to be anyone eligible who works more than 30 hours per week. So if you're working more than 30 hours a week, you are eligible to sign up for these benefits. to be the waiting period, if you, let's say you were a new hire, would be the first of the month following 30 days of hire. So you'd have to work 30 days to also be eligible for these benefits. The 30 hours is going to be your threshold.
If somebody starts working and now can qualify during the year, so they work 20 hours for a bunch of time and at some point start working for 30, is that a qualifying event?
Yes, that would be a qualifying event. You then would be eligible and you'd be able to sign up on the plans.
Okay.
You just have to make sure you communicate that with our team, and we'll be able to send all the proper paperwork and either have Patricia add you, or we'll add you to the Navigator system, and an email will be sent out just like it was this open enrollment. And you'd be able to make your elections online and we can get everything submitted.
Yeah.
Alrighty, so I'm going to start with the medical plans. So first thing I want to say is medical plans for this year. So with your company being over a certain threshold for how many employees are within the company, there will be a requirement to offer health insurance. So that's why you are getting this offerage now, affordable healthcare through your employer. So if you are on the individual market and you are getting tax credits or financial subsidies from the government for that, you will no longer be eligible for those being on the plan. So you may want to make sure you have that well communicated and understand, because if you are receiving those subsidies throughout the year and you did have the option for employer sponsored coverage, there could be a penalty where you may have to pay those back if you were to get caught having those. So just want to make sure everyone's aware of that. It's a really hard thing to understand. It's not a common thing people know. So I just wanted to bring that and point that out right away before we dive into these medical plans.
And it's not like we have an option on reporting. We report tax information every week. The government knows who works here. So when we start this plan and it says, here's our employees, you automatically become somebody who was offered this insurance.
Exactly. So with that being said, you guys will be receiving a very generous contribution towards these plans. There will be a $200 contribution to the plan options you see in front of you. The prices you see on here are after that contribution amount. So the $200 applies to the employee only coverage. So if this plan, this first one you see right here, was normally $399, but to you guys it'd be $199, and that's a monthly cost. But when you go and make your elections through the admin system, it will show you that broken down per paycheck. So you will have three options. There's going to be, it's all through Benny. So that's going to be your plan, Benny MV plans. You'll have an Advantage, a Premium, and a Max. As you go from Benny, Premium to Max, the coverage just gets better between the three. So Advantage is going to be the base plan, and then Premium, and then Max. And you can see how the cost changes between the different plans. But for all three of these, you get that $200 off the premium, and these rates already show that taken off of there. Again, you'll be able to see it really easy in the Navigator when you're making your elections. So I'm going to start with the Advantage plan. These are going to be MV plans. The biggest thing with these plans is they're going to act very similar to traditional plans. There are some coverages that won't be covered. Let's say, for example, you have cancer, you're going through any chemo or treatments like that. Going on the individual market is going to be a better option for you, because those plans will have the coverage there where these plans will not. So if you have significant health needs that you're going to be going in, maybe you're getting radiation therapy, anything like that, you want to stay on those individual market plans. These plans are going to be really rich for those that are going in for frequent visits, but they're not going to have any critical, let's say they don't have a ton of drugs, high cost drugs they're taking. They just need it more for those appointment costs to cover anything that may come up throughout the year. So that's where these plans are really rich. On this plan, this first plan here, you'll see preventative wellness. Preventative care is going to be covered at 100%. So that's going to be, for example, if you have a colonoscopy, you have a mammogram, a physical, those services are going to be covered at no charge to you. So you can go in, get those taken care of. You're not going to have to pay for those appointments. It's going to be, let's say if they take blood work or anything like that, that's where you're going to have to pay for the bill within that. So if they're pulling blood work on you, if you get a bill, that's where that's coming from. On this plan, you're going to have primary care and specialty visits. So with that, there's going to be a $15 copay for any of those visits. Let's say you have a fever and you go in to the doctor, that would count as a situation where there'd be a $15 copay. If you're
Now,
going
is there
into,
a,
oh, sorry.
Casey, is there a telemedicine so you don't have to go in? I mean, I know I'm jumping
Yep.
a little, but
Yep. There's going to be a telemedicine on here. This called Recuro Health, and it's 24/7, and it's going to be no cost to you. So if you want to use the telehealth, which is just virtual care, that's going to be a great way to save cost where you don't have to go into the doctor. So let's just say maybe you need a prescription. Using the telehealth will be the best way to go in, so you don't need to go into an actual facility and pay that copay to just get a prescription. So that'd be a situation. So you will have that telehealth on here as well.
okay, so they're
And
complementary and okay,
yep,
thank
it's going to all be through Recuro. And as I go through here, you'll see there would be an app that you can download, and it'll house everything for you on these plans. So you can look at your claims, you can look at your um, facilities that are going to be in network. There's going to be search links. There's going to be other information on there within the app that's going to be very beneficial. So you're going to want to make sure to get that downloaded. That's what this is right here, this health wallet.
And you made a comment if somebody had some advanced illness and they may be better off with the plan they have, that still is okay?
Yeah, so if they want to stay on like an individual market plan, so those individual market plans, they're going to have coverage because due to the government, they can't deny anyone. If you have cancer, you're not going to be denied on one of those individual plans. The reason why I bring that up is because they're going to cover stuff, for example, here, notable exclusions in the plan. So if there's anything like this that you may have, you might want to stay on those individual plans.
And then that's no
So
penalty to anybody for that.
it's
That's
no penalty.
okay.
Yep.
Okay.
So that's going to be that big difference here. With this plan, you're going to have, let's say you have an ambulance ride. There's just going to be a $500 copay for that. Let's say you go and you have physical therapy. There's a cap of 8 per year, but you get a $50 copay on those. So the biggest difference between these three plans are going to be the limitations on how frequent you can go to certain, let's say physical therapy, chiropractic services, or home health care. There's limits that are listed on here of how many you can have per year. So that's a big thing to kind of keep in mind, especially if you're going to a chiropractor, you have a $50 copay, but again, you're going to have 10 per year. On this plan, one of the big differences between the other two is there is a deductible for hospital benefits. So let's say you had for these two right here. So let's say you had a surgery that you're going to be in the hospital. You'll have a max of up to 5 days, and you can get up to 2 surgeries per year. There's a $500 copay after you pay the $1,500 individual deductible. If you're an employee only on the plan, if you have a family, you would have a $3,000 deductible. So that's going to be the big difference between the plans too, that I'm going to talk between the premium and the max MV plans versus this advantage plans. The other two do not have that deductible you have to hit first before those copays go into place.
All the copays, like you just listed with the primary care and all that, it's deductible first?
Nope, just these two.
Okay.
It'll say after deductible on here. So
Okay.
anything you see after deductible. Big thing on here too as well is if you have generic drugs, those are going to be covered under a copay. It's going to be the preferred brand, non-preferred, those more higher expense drugs that are going to be billed they're going to be billed higher. You're not going to have a copay on, but they have really good discount programs within here that you can take advantage of to try to get discounts on those drugs. Another big thing to do is you can ask for manufacturing coupons when you're going into the pharmacy. That's also a great way to reduce the cost of drugs. GoodRx coupons out there. If you go and Google GoodRx coupons, you can look up drugs. They have really good drug coupons out there. Ask the pharmacy when you're going in if they have any coupons, anything like that. That's going to be your best ways to limit that drug cost.
When you have a coupon from GoodRx, does a pharmacy have to honor it?
If if it's applied, if you look at it, it'll say which pharmacies will take it. So if you go on goodrx.com, they'll say which pharmacies take the coupon where you can go.
Okay, thank you.
So for example, I was on there today looking at a drug, it listed CVS, Target, Walmart. So I know if I go there, that's where that coupon could be applied.
Okay.
Another big thing too we like to talk about is if you get a bill from a facility, and this just goes in general for healthcare. So that even if you're on this plan, you're on an individual market plan, negotiating those bills. So if you go to a facility and health insurance is kind of like this, where it could be blind, where you don't know the cost going in. When you get that bill, try to negotiate the bill and the rates that you're getting to try and lower those expenses. If you have a super high cost drug, ask them if maybe there's another source they can get that drug, or there's a different drug that you could be covered on under that would act in the same. That's not that commercial brand, like I like to call drug, that is going to be more expensive. Asking those questions could result in you saving money in the long run, and pushing back a little bit's a big key way, because there's a lot of people, a lot of doctors out there that maybe they're prescribing the higher expense drug because maybe they're getting paid better off it. I'm not saying that's every doctor. I'm just saying that's a situation that could happen. So you want to just always be double checking where you're going and what they're prescribing and why. So going through just this Advantage plan again, you want to look at here, anything that says copay, you're going to have copays for it. And if it says after deductible, that's where you're going to have to hit that deductible and then have that copay. Up here at the top, which I should have said right away, Patricia, on here, this is where it shows that $0 copay for telehealth.
Okay.
Alrighty. With that said, I'm going to move into the next plan. This is the Advantage plan. This is going to be the cheapest option for you. The next plan is going to be your premium MV plan. So like I said, on this plan does not have that deductible tied to it. So if you were to have an inpatient hospitalization, instead of having 5 days, you can be in there, you can be in there up to 7 days. And instead of 2 surgeries per year, you can have 3 surgeries per year. And then there's a $5 copay per admission, $500 copay per admission, deductible 0, you're not going to hit that. Wherever you're going, you're going to want to make sure you're in network. PCHS is going to be your network. They're a very large network. You're going to be able to search any providers when you go in. If you're going into a place and you're not sure, always just ask. Make sure you're being charged in network. You do not want to be charged anywhere that's going to be out of network. On this plan as well, you'll have your telehealth at that $0 that we talked about. You'll have your primary care visits, specialty visits, $15. Any of your preventative care is going to be no charge. If you were to have any MRIs or ultrasound, or not ultrasound, if you have any MRI, CT, PET scans, you'll see on here it has $350. But if you look right below here, advanced imaging, if you go through this company called Medmo, and you'll see in this benefit packet and in your app, they'll have the contact to Medmo. They'll set you up with the facility and network where that could be covered 100% for you. So always get that. If you have an MRI that you need done or a scan, make sure you go through Medmo, because that's going to save you from having that $350 copay.
And no limit on if you needed it multiple times.
Two per year. Yep.
Oh, okay, it's the same.
Yep, it's subject to the same limits as the one
Okay.
above.
Oh, okay.
Again, this is going to act and feel like a traditional plan in that sense with these co-pays on here. Ambulance ride 1 per year. This one gives physical therapy. It goes up to 12 times per year. You can go $50 copay. And then if you were to have any chiropractic services, acts the same as the advanced one, where it's just limited at 10. Maternity benefits, if you're going in for delivery, $500 per admission, and then any professional services, $350 copay. Drug costs, Still going to be the same as that first one, Advantage, $10 copay for generic drugs. And then again, on those more expensive ones, you're going to have discount options within the app that you can find I'll go through that part of the packet, but it's going to act the same as the first one. It's just going to be some of the limitations are increased. And the big thing is you don't have that deductible in case you were to have a surgery.
So, a question, all these
Mhm.
copays, ultimately, are they part of that out-of-pocket maximum?
So the out-of-pocket maximum can be deceiving on these plans. That's saying you almost kind of have to ignore it because there is really no out-of-pocket maximum. The out-of-pocket max are these limits per year. So yeah, these are going to go towards that max out-of-pocket, these copays in here. But let's say you were hospitalized for 14 days instead of that 7-day limit. Those extra 7 days are going to be charged extra on top of that. So you're not going to have a max out of pocket on that. So these limits in here are where the max out of pocket adds up within these copays.
Okay.
On a
So,
traditional plan, you may have a surgery or something, you hit your max out of pocket, you're covered. So if you know you're having a big surgery that you're gonna have super high medical bills, maybe being on a individual policy may be better for you.
yeah.
Any other questions on the premium?
Nope, it's a lot to just get your arms around. Okay.
Yep. So this next plan I'm going to go to, this is going to be your max MV plan. This is going to be very similar to the last one I talked about. The biggest difference on this plan is you're going to be looking at these extra services here. Chiropractic services, you're going to have 20 instead of that 10 that you saw in the last one. Physical therapy will still be at 12, 2 ambulances rides for the copay. You'll have your same copays as above for your primary care, your urgent care, telehealth, advanced imaging. You won't have your deductible on here. It will be $0. Your surgeries, you have a limit of 14 days on here instead of 7. And then you can have up to 4 surgeries per year instead of 3 from the previous plan. So that's going to be the huge difference here in max. And also preferred and non-preferred drugs, these are going to have copays for them. So preferred brand drugs can run maybe a couple $1,000 if you were to get on them if you were just going to go and pick it up without insurance and a copay on it, they could probably run a couple $1,000 with this if they're covered under the drug list. $50 or $75 for non-preferred brand. So you're going to have that copay for those high expense drugs where you won't have that on the other two. So just from that, it could justify going on this plan versus the other two. Again, surgeries, you have the copays, you're not going to have to hit that deductible. So biggest thing with these max MV versus the last one is going to be your drugs and then your limitations per year. Does that make sense? As clear as mud. So going through here, I want to talk about these benefits in here. If you look through the packet, it gives you a breakdown of preventative services that are covered under 100%. So look through these before you go in for anything. If you're curious on what's covered, this gives a really big benefit for adults and for women on what situation is going to be preventative care. So this is a great packet. So if you want to take anything, rip these pages out or print these pages off so you can have for your education as you may need situations happening throughout the year.
Now, are these specific to that max plan, or this was all of them?
This is all of them.
Okay.
This will be all of them. Here's your health wallet is what I was talking about before. So if you decide to elect these plans, here's a QR code on here, or you can go to healthwallet.com. You want to get this because you're going to be able to house your ID cards, or you can have digital ID cards on here. It'll give you prescription benefits on here. That's where you can find those discounts that were talked about earlier. It'll show you your claims within here. Any provider network search link, and also your virtual care will be in here as well. And then any benefit info about the plan will be in here as well. So this is going to house all your information that you need to know about your medical plan. So definitely a great app. It also has a text to help feature in here where if you do have any questions, you can do it all through that app. So you're gonna want to make sure you get that downloaded right away. Once you get your member ID information, get in here, get logged in. Member perks, like I said, you're gonna have that free advanced imaging through Medmo, 24/7 the virtual care. So you want to take advantage of those. Telemedicine, there's just a flyer on different kind of telemedicine things, frequently used treatments, people who use the virtual care. So there's just a list here on what those are. If you have allergies, cold, flu, ear infections, maybe you have a kid that gets a lot of ear infections, calling the telehealth will save you money than having to go in and paying those copays. Medmo, this is going to be the phone number for the advanced imaging. This is your, like I said, you want to make sure you use this Medmo account here so you can avoid that $350 copay, because then it's covered 100%. Like I said, on here, key things it calls out, it does cover ultrasounds on here as well. So if you do have an ultrasound, you can have 2 per year and you can cover them under this Medmo plan. Once you get these plans, you're going to want to register under these wildcard savings, because what it can get you is dental. It could get you savings on dental plans, vision. There's just discounts in there that you can use. Hearing aids, lab services, and then any like diabetic supplies. There's a bunch of other different stuff in here. So once you get your member ID card, you can go and to this www.wellcardsavings.com and try and find some additional discounts within the plan.
And those are the well card is only is available if you take one of the medical plans.
Yep, exactly.
Yeah.
All this stuff is going to be available to you if you're on one of these MV plans.
And the reason I mention this for everybody else is that even if you don't take any of the medical, there are some additional insurance items that we're offering. So that's what's going to come next, but that doesn't get you into the well card savings.
Alrighty. So with that being said, I'm going to go into the additional plans. These are going to be the non-medical benefits I'm talking about. So now this is going to be separate from the medical insurance. This is an a la carte. You can pick what you want. Just like the medical plan, you can pick which one you want. You don't need to be on the medical plan to choose these benefits. So you can still be on these benefits without having a medical plan. So on this, I'm going to show just the general cost here. Your employer, Patricia, covers the vision costs on these plans. So if you're going to need to go in for an eye exam, that's going to be an option for you. You're going to be automatically enrolled in the vision as an employee only, and you can always add your family. Dental is going to be a voluntary benefit. So you'll see that cost breakdown when you're doing your enrollment. And I'm going to go through the dental plan first because it's a very rich dental plan that you won't be able to find on the individual market for what you're going to be getting with this coverage. So first plan here, this is going to be your dental insurance. Dental to me is super, super important. Making sure you have a healthy mouth is going to save you a ton of money in the long run when it comes to medical bills. There's a lot of medical issues that arise from having poor dental hygiene. So making sure you're going to see the dentist, getting your teeth cleanings per year, getting stuff that may happen fixed is going to help your overall health and save you money on your medical expenses in the future. So I think having a dental policy is very, very important. The big takeaway on this plan is you're going to get your 2 teeth cleanings every year. You're going to have an annual max benefit allowance of $3,000. So if you have a family on the plan, each person in the family gets $3,000. What that covers is if you were to have a basic service, let's say you have a filling that needs to get taken care of. The insurance is going to cover 80% of that bill after you pay this $50 deductible. And then they'll cover up to $3,000 for an annual maximum. So if you got a filling and your bill is $2,000, you pay $50 for the deductible, and then insurance will cover 80% of that bill, and then you pay 20% of the remaining part. So that's how these plans work. If you have major services, let's say you need a crown put in, the insurance company will cover 50% of that bill up to that 3,000 annual max. So if you have like 8 crowns you need done, don't do them all in the same year. You probably get maybe 1 or 2 of them with that high annual maximum. But again, this is a very rich dental plan. You may find a plan for 1,500 annual max out on the market, but you won't find a $3,000 on the individual market.
And most emergency things don't run like 8 crowns aren't likely in an emergency, right?
Yeah, not likely. I was just using that as some people may not have dental work in a while, and all of a sudden they have a bunch of issues that are popping up. I'm just saying, make sure you're aware of that annual maximum.
And
And
then
if you
just
can
work and
space things
plan it.
out.
Yeah.
Yep, exactly. The cool thing with this plan is you can roll over up to $1,000 on here. So if you don't use this $3,000, and let's say you have $1,000 left, they will roll over into next year.
Only a
So
thousand.
you can build it up. Yep.
Okay.
So on here, you can have a child up to 26, and then after 26, that's when your child gets kicked off the plan. That's just going to be general for medical. All these benefits, 26 years old is going to be considered no longer a dependent. So just want to make that clear too. You're going to be on a PPO network, so they're going to have a very large PPO. Guardian has a very large PPO network. Always, again, double check, make sure your dentist takes them, and then make sure you're being treated in network. Right here on this plan, it breaks down preventative care services, basic care services, and major care services. So as I was talking about fillings before, that would fall under this basic care where you have that 80% coinsurance coverage. And then when I was talking about crowns, that falls under the major care. And it shows you the copay, the coinsurance right here. So use this as a tool to, if you have something come up, just kind of understand what it falls under, so you have a good understanding on what bill you're going to be getting. So the bill, for one, you can double check it and it makes sense for what you're getting. So that's going to be dental coverage. You're going to have that option to enroll in it. Vision care. So vision is one of the benefits that as an employee, you're going to be covered. I do highly recommend this. You're going to have the VSP network on this plan. So you're going to have the large VSP vision network. On this plan, you're going to have a copay of $10. So make sure you're going in and getting your vision checked. Going for that eye exam once a year, it's a $10 copay. Where you're really going to come out ahead is if you're going into facilities to get glasses, you're getting contact lenses, you're getting frames. There's co-pays, there's material coverages for all those. So on this plan, you have up to $130 copay allowance. You have $130 allowance for contact frames or lenses. So make sure you take advantage of this vision plan. The biggest thing is making sure you have it so you can use it, right? So know you have vision coverage. It's through Guardian. You're on the VSP network. It's a super large network. And then coming out ahead on if you're going into facility, if you order stuff online, that's where these benefits aren't going to pay because they're not going to cover online services. You always have to make sure you're going into where you need to go.
Can you explain what does it mean with that Costco, Walmart frame allowance amount over 70?
Yeah, if you go to, let's say, a Costco, Walmart, or Sam's Club, for example, you know how those are membership, except for Walmart, but Walmart's part of Sam's Club. They're membership places, so there's already discounts on the glasses. So they limit the allowance at those places because they're already discounted within those facilities
Okay.
because they're membership companies. So you need a membership to go there, and they have discounts within them already.
But what's that amount over 70 mean?
So that's just saying you're going to be paying the amount over the $70. So if your glasses were 100, or the frames on here were $100, you pay 30.
Per pair of glasses?
Yep.
And one is allowed in a year or?
Yep. Correct. You get one every year. Big thing on here, make sure you're going in and getting your eye exam, $10 copay, very affordable. And it's a coverage that's already taken care of for you. So use the benefits since they're at your disposal. Ignore these costs right here. They're going to be different based off of the contributions. This is what Guardian gives us. They just don't take out the employer plan. The costs are going to be up at the top, and then Navigator when you're going through, it's going to be $0 for you as an employee only. But when you add family members, it's going to be six. Like for example, if you have a spouse, it's going to be around $6 for that as well. So that's going to be your vision coverage. You're going to get into life insurance next. So Patricia covers a basic life insurance package for you. So what that means is you're going to be getting a life insurance that covers $25,000 if you were to die or pass away, I should say, and then an additional $25,000 to a beneficiary if you were to die of an accident. So it could be a benefit up to $50,000. It's a really nice benefit. It really helps out your family in case something were to happen, cover funeral expenses and such. The big thing on here, and another big thing about getting in and making your elections, you guys are all going to get this. So make sure you have a beneficiary listed. So if you go in and make elections and say you don't pick anything else, make sure you put a beneficiary down so the government doesn't get that money first before it goes to your loved ones. You want to make sure that gets directly paid out to your loved ones in case something were to happen to you.
So let me get this right. The people, no matter what, if you want the insurance, you have to go in and sign up in this open enrollment. And
Mhm.
then you have to pick that you want the life insurance.
When you're going through the enrollment, it'll tell you you get life insurance from your employer. And it doesn't even give you an option of saying, no, I don't want it or not. It just tells them they have it
Okay.
because it's going to be covered under a group.
Okay. And if people have their own other life insurance, this can be additive.
Just add it on top of it. You could have 4 different life insurance policies with 4 different carriers. And let's say you pass away, they pay out, they all pay out.
So there is no reason for anybody to not sign up and take this.
Exactly. There's zero reason not to take advantage of this.
Okay.
So make sure you go and put your beneficiary down. There is an option as well to have voluntary life. So this is additional life insurance. Let's say you're young and healthy. It may be better for you to go find a term policy out on the individual market because it might be cheaper for how much you can get for coverage. But let's say you may have some medical concerns. You can get up to $100,000 in life insurance coverage without any kind of medical questionnaires. So it's an additional benefit that you can get without having to pay high premiums for a health insurance plan out on the individual market, for not health insurance, life insurance plan out on the individual market.
Okay.
So
So the
definitely,
25
yep.
is what is essentially free, and then you could buy more.
Yep, exactly. So you already are going to have that 25 and then you can buy more on top of it. You can buy some for your spouse as well. So you can get increments up to 5,000. You can get a maximum amount for your spouse for 250. You can get a max for yourself of 400,000. It's just once you cross that $100,000 threshold is when you're gonna have to start doing medical questionnaires. And then it's not gonna change your rate. They just want to need to pre-approve you for it. Child benefits. Obviously no one wants to think about a child passing away, but child benefits are to have insurance policy, you can get up to $10,000 in life insurance for your child. It could cost you maybe $1 or two off your paycheck. It's very affordable, just as a just in case. Obviously, you don't want to think about something like that happen, but having this as a benefit in place uh, could be very beneficial in the future in case something were to happen. But again, obviously no one wants to think about passing away. No one wants anyone, their spouse, child, themselves to pass away. But having that protection for your family is the main reason for these life insurance policies. When you go in here, there'll be a like a bar that you'll slide in the enrollment tool that you'll put your increments of how much coverage you want, and it'll show you the cost per paycheck built right into that tool. So you're not gonna have to do any math to figure out how much it's gonna cost you. You can just set the amount that you need. So let's say you want 100,000 in life insurance, it'll tell you what that's gonna be per paycheck. So this just shows the rates per age, but you're not going to need that because it's all going to be shown in the navigator. So you don't have to worry about doing any kind of math. Alrighty. So the next plan. So now we're going to get into your disability insurance. I'm going to talk about short-term disability and long-term disability. A short-term disability is going to be a covered benefit for you. So you guys are already automatically enrolled in short-term disability. So what that means is if you guys are too sick or too hurt to work after the 8th day of any sickness or injury, this plan starts paying out. And it pays out 60% of your weekly earnings or up to $1,000 per week, the lesser of the two. And it pays out for 12 weeks. The nice cool benefit with this as well is if you were to, let's say you had a child, pays out for 6 weeks for maternity, for a regular birth, and 8 weeks for a C-section. This is a great policy to have in place. If something were to happen to you, that benefit amount is more than what you could get from the state. And the contributions are going to be really nice. So if you have something that's going to happen and you are aware of you're going to be out a certain amount of time, having a claim pre-submitted and ready to go with Guardian is definitely something I recommend doing. So when that 8th day passes, you start that payment right away. Obviously, there's stuff that may be unexpected, but making sure you get that claims reporting, that claim going right away is how you can get paid. And again, if you have something happen at like let's say something happens at the hospital, you're tied up in the hospital, your doctors are going to be working with Guardian to make sure they submit the proper paperwork to show that you're going to be out of work.
A question, if,
Mhm.
and I don't know if this is a silly question or not, but so let's say something happens and is it 12 weeks total in the year? Or could two incidents cause you twice to be on short-term disability in a year?
So if it's going to be two instances, you're going to be
Non-consecutive.
non-consecutive, then you'll be covered.
Oh,
So,
okay.
yep. Hopefully that doesn't happen.
I know, I just thought, I mean, let's say somebody has a kid and then, a bunch of months
Yep.
later they fall and they break an ankle, I mean,
Yep, exactly. Um, the other benefit that's going to be tied to this as well, this is going to be a voluntary benefit. So this is going to be one that is going to be one that you be sign up for to pay for. This is going to be long-term disability. Long-term disability is very important to have for income protection in case something happens to you. You hate to have to get hurt and be out a very long significant of time without any income. This gives you a 60% salary or max amount of your monthly benefit, not your weekly. This is going to be your monthly earnings, or up to $5,000 per month, whatever the lesser is of the two. It starts paying out after 91 days. So pretty much once that 12 and a half weeks is up, this will start kicking in. Then you'll have long-term disability. Um, this pays out to Social Security or retirement age. So if you're out for a very long time, this will pay out for that amount of time.
with no stoppage up until Social
No,
Security. Okay.
exactly.
Wow.
The one big thing on here is it has 2-year own occupation. So what that means is after 2 years, let's say it's determined you can get a job and it's a lower income for you after 2 years, they'll adjust the salary amounts on your monthly salary to what your current job is, but you're still gonna be getting those payments. So I highly recommend people sign up for long-term disability. You never know what can happen, and you don't want to be out on that income for that long a time. Again, you'll be able to see the rates right in Navigator when you're signing up, so you can see the pay per period before you enroll in anything. That's gonna be your benefits on here. If you do sign up for a health insurance, or not health insurance, for life insurance over that threshold, let's say $100,000, like I was saying, where you need to do the questionnaires, there's going to be an evidence of insurability form. It's going to be right in the Navigator where you could download it. You have to fill it out and send it to us so we can get it submitted to Guardian to make sure we can prove your insurability. So just a heads up on that. If you see that EOI pop up, if you put the increments over 100,000, that's why you're gonna have to fill out
Okay.
one of these forms.
But other than that, you don't see that. You don't see
No,
this.
exactly. Um, within here, there's going to be some assistant programs, some guidance services within Guardian that you can use. Maybe you're overwhelmed, maybe you need some mental health treatments, maybe you just need someone to talk to about life situations, financial resources, as far as like just doing your taxes, or let's say you just want to talk to someone because you need emotional support. Guardian has some services in here that has 24/7 live assistance that you can take advantage of.
And that's no extra charge. That's just by having
Nope,
the other
just,
policy. Okay.
yep, it just comes with it.
And that comes with any of these?
Yep. So if you enroll in, if you have any of these qualified lines through Guardian, so dental, vision, life, then you have that coverage.
Okay. So if somebody takes the vision, which doesn't cost them anything, they still get all
Yeah.
these
So they're
other
gonna
stuff.
have this.
Yeah.
Yep. By having Guardian.
Wow, that's cool.
Yep. Alrighty. So with that being said, ignore this stuff. These are just paper application forms. You guys are gonna have an online that you can fill out. So you're not gonna have to do any of these paper applications because you guys have a nice slick software. On here as well, we have a financial progress form. So with this, you can fill out, you can meet with us. We can go through a financial planning with you, take a look at your current assets, maybe take a look at how you're currently handling your financials, give you any tips and pointers, maybe set up any accounts for what you want to do. So this is just a financial wellness program that you can get in free to you. You can set up a meeting free of charge and we can talk to you and go through any financial support you may need. This is going to be our team in the back here. We're a growing firm. Everyone's very bubbly, very nice. So feel free to reach out to us. We love talking to people. That's why we're in this business. I came from an engineering world. I was an extrovert in an introvert world. So I like to talk to people. I like to communicate. I like to help, most importantly. That's why I'm here, is to help individuals. So you guys asking questions, it fulfills my day knowing I can help. So feel free to ask. In this packet here, you're going to see in the back here, you're going to have my contact information. So this is how you can get a hold of me. My phone number's on here and my email. And then Leah is going to be our service coordinator. So any questions with, let's say you have a ID problem or something along those lines, contact Leah. She can help you out with any of those. Maybe you need just some questions on the summary of benefits. Ask me. I can help out more detailed with any of your planned benefits. And then again, my number and email are right here. Feel free to call or email me.
And if you guys are wondering, again, I think I started off with this a little bit. Some of my colleagues, other BrightStar offices, have worked real well with this firm before, and they just come very highly regarded, and people have gotten excellent customer service. So then, as we get into this world of insurance, instead of it being the cold, impersonal people that you don't know where to go to, you're seeing who the people who are going to help us through.
All right, Patricia, is there anything else that you want me to talk through? Is my screen still yeah, it's still sharing. Or else that's everything. It's great to meet you all. If you have any questions, need any help with the Navigator, reach out right away. You're gonna have the weekend to finish it. Get in there, get logged in, get your benefits enrolled, because we're gonna be closing it on Monday, so we can get everything submitted before the new year, especially with Christmas coming up. We want to make sure it gets all to the carriers.
Okay. No, thank you. I'll close it here, and people, please look for the Navigator What's the site that it comes from again, Casey?
It's called Employee Navigator.
Okay.
You'll see a big email with a bunch of words on it that will say, hey, your benefits are eligible for a Kaya World BrightStar. And then it'll go through your open enrollment time period that you'll have.
Okay, so that's the thing to be looking for, folks. All right, thank you, Casey. I'm going to stop the recording and